Well, staying in the UK, the stock market is losing the equivalent of more than $2 billion a week to takeovers of London-listed companies. Property services company Mighty is one of the latest to go, bought by OCS Group for £3.1 billion. For an overview of UK M&A activity, let's now bring in Bruce Embley, private capital partner at law firm Clifford Chance. Bruce, nice to have you with me on set.
Thanks, Susie.
You're actually, Clifford Chance, the legal advisor for EasyJet in the takeover by Apollo. I wonder if you think that this is the start of things to come for UK PLC. Big private equity giants buying up British icons.
Well, I think we've had a spate of P2Ps for many years now, and I think the interesting thing certainly this year is the focus on bigger deals, and that seems to be where a lot of the private equity money has been going, which is into bigger, higher quality assets. That's actually a theme we've seen on the US as well as the UK. So EasyJet is an example of that. Intertech is another example of that. The same is happening on the US with businesses like AES as well. And I think that is really just a trend where private equity is now, I think, certainly at the big fund, looking at higher quality assets, which are often coming at a much bigger value, and forming consortia where they'll bring in different investors as well. And so this definitely, 2026, I think, feels like the return of really, really big M&A. We're not just seeing that on private equity, we're also seeing huge deals on the corporate side as well.
Well, it makes you wonder how long it'll last. And I'm not saying it's a bad thing, right? But what policy levers could stop this outflow of British firms to foreign firms and PE?
Well, you say that as if it needs to stop.
I'm not saying it's a bad thing, but if I were the Burnham administration and I didn't like the look of it, what would stop it?
Well, the regulators have many tools in their armoury, and you will see some of the more sensitive sectors like defence and energy maybe getting a little bit more scrutiny, and there are all sorts of tools that can be used. But of course, any healthy capital markets needs a healthy takeover regime as well. And this is not just a UK phenomenon. So, and of course, you want to see, you talk on one hand of private equity taking private a company, but that's often a form of exit as well. So like the Shawbrook IPO. So it's a bit of a circular theme where what might be bought might also be returned to the stock market.
I do want to come back to the exit backlog, but just on where you say we've got a trend of bigger deals, you've talked about as well how it's consortiums now leading the way. And I wonder whether that's more about spreading risk or if it's just that, little players haven't got the firepower, individual buyers haven't got the firepower to make these moves.
Yeah, I think there's a number of factors. It's a very good question. So the reality is, for the size of deals you're sometimes looking at, if you want a lot of equity in that, you will often bring in 2, 3, maybe sometimes for the really big deals, even more partners. And that can often lead to a more balanced board, more different perspectives on the board. But of course, the key whenever you're putting together a consortium from an M&A practitioner's perspective is they've got to be like-minded. There's no point forming a consortium where one person has a much different view in terms of how long the asset should be held than somebody else. But you do seem to see a lot of the same players teaming up over and over again.
Yeah, so they're all on the same page. So then on that exit backlog, when do you expect it to clear? And when does the decline really in PE returns, what does it mean for the future of the industry?
Yeah, and this has obviously been a theme for a few years now, which has capital deployment being outpacing capital returns. Yeah. I think, and it is front of mind for all private equity funds. It's very hard to raise a new fund if you've not deployed any from the previous one, and I think we will see more exits. We've already had a couple of very, very big exits this year, and that I think will continue.
And you've said in your notes that PE's being selective is not in a slump. But we have so much talk about this bifurcation between winners and losers. Is there a time when you start to think we'll see more tangible signs of firms in real distress?
In terms of distress, I think very rarely is distress just a capital structure issue. There's normally always a fundamental theme that is running through that business, and I think a lot of the time M&A gets blamed as a sort of that was the reason. Whereas it's always more complicated than that, and I think there's been a lot of talk about sectors hitting the wall and not actually hitting the wall either at all or at quite the pace that was expected. So I think there will be strains, and of course we read about companies in distress all the time, but I don't think there's a great panic that there's a wall of distressed companies coming down the line. And I think on the exits front, one of the big themes we've noticed over the last few years is PE is prepared to hold on to assets for a lot longer these days. And I know that also the continuation vehicle has been a source of much debate over the years, but I think that's just a well-accepted piece of the M&A machinery now. So when you're looking at the need for exits at the same pace that might have been happening 10 years ago, I think you've got to factor in the fact that deals are now bigger, and there's often been held on to for a lot longer as well.
But where you've got the consortiums that we were talking about before, do you expect to see smaller PE firms having to consolidate just to stay in the game?
No, because there's different value entry points. So people, I think the last 6 months has been, there's been much more focus on the large cap funds, and they probably had more of the press headlines. But the year before that, mid-market was much bigger. I think we've seen a lot of change in the venture capital market as well. So I think every business has different entry points, and of course with a different risk and reward profile, and that will continue to be the case.
All right, Bruce, really interesting talking to you. Thanks for coming in. Bruce Embley there, private capital partner at Clifford Chance.